Hello, hello. And we are live. All right. Today, I'm excited about this topic because I didn't realize some people were doing this, but I have had multiple self employed hair professionals, barbers, braiders. Actually, I see this more with hairstylists, but I've seen hairstylists come to me and they are, wanting to file their taxes and they are giving me 1099 NECs issued by their business. And just to kind of back up a little bit, a 1099 NEC is a tax form from the IRS, and this tax form um, reports non employee compensation, non employee pay. And so these self employed hair professionals will create these 1099 NECs on themselves in order to self report income. It's like a way to prove that they've made money in their business. And that's actually wrong. And I didn't realize this was so widespread. And I will tell you, at first I was like, wow, like, they're doing this all wrong. Like, they should talk to a professional. But then, guys, I promise you, it was so crazy. I posted something on my Instagram page and it was about self-employed people and how they can pay themselves. And no lie, this accountant commented on my page and said, oh, well, I always instruct my clients, and she works with beauty professionals, always instruct my clients to put themselves through a payroll service as a contractor. And I am like, what? You're an accountant telling people this? And so I politely went into her DMs and was like, hey, you should stop telling hair professionals or your clients this because it's wrong. And so if you have ever thought about proving your income by putting yourself on a 1099 NEC, stop. Okay. So that was kind of like my opener, but I'm Jennifer and I am the founder and CEO of Hair CEO. It's a business advisory and accounting firm catering and helping self employed hair professionals and hair business owners run legitimate, profitable, and bankable businesses. And this series is called 2026 Tax Talk, where I'm coming to you for 90 days during the beginning of the year to just help you understand some things about taxes to prepare you for tax filing season. And a lot of clients, or a lot of just people in the hair industry that are self employed, get really overwhelmed and confused. And so I'm really here to help. Simplify things and answer any questions. So in the chat, you'll see Tara. Tara is one of our enrolled agents at Hair CEO. She's going to be moderating for me today. And if you have any questions that I can't get to, Tara is going to be amazing and she'll be able to answer any questions that you have as well. But for all of us to get on the same page, let me actually show you what a 1099 looks like. Let's see, okay. So 1099. So this is a IRS 1099 NEC form. What you're looking at right here is a non-employee compensation form. And self-employed, or I'm sorry, businesses provide this form to people who they pay throughout the year. You're supposed to. You pay throughout the year when you pay that person or business more than $600 by cash or check. And so this is exactly what you would fill out. Now, this is what the accountant told her clients. She was like, oh, you just need to fill out this form And this is a way to prove your income. And that is wrong. So that is the form that we're talking about here. This form, and let's now go to the IRS's website because I want to show you what the IRS says. Because I don't want you to trust me. Like I just want you to know that this is coming from the IRS. This is not like an opinion of mine. This is facts. So now let's go to the IRS website. And this is the IRS website, and it's called Self-Employed Paying Yourself. So we come down here to the 1099 NEC, and it says you cannot designate a worker, including yourself, as an employee or independent contractor solely by the issuance of W-2 or the 1099 NEC. It does not matter whether the person works full-time or part-time. You use the form 1099 NEC to report payments to others who are not your employees. So that, how do I get back to myself? I'm over here switching screens. Okay. So that is how, that's the proof. Like, you don't have to believe me. That's directly from the IRS's website. So now if we know that you cannot, put yourself on a 1099 NEC just because you're trying to prove that you made money. And people do this because either they're trying to buy a house or they're trying to get a car, or maybe they're trying to get approved for an apartment or, some type of something. Lenders, underwriters, apartment complexes, they will ask you for proof of your income. And so if you don't have a W-2 job and you're not, and you don't have any other form of like way of proving yourself that you made X amount of dollars, you would give yourself this 1099 NEC. So now the question becomes, okay, well, if I'm not supposed to do that, what am I supposed to do? So I'm glad you asked. So I have here really three kind of categories here. So we have the sole proprietors or single member LLC, and then we have partnerships, and then we have S Corp and C Corp. So we're going to go over how to actually prove your income no matter which bucket you fall into. So my sole proprietors and my single member LLCs, this is like the majority of people that it's going to pertain to. This is who I've been seeing falsely or incorrectly fill out a form 1099 NEC. And so the number one way to show or prove your income when you fall in this category is a filed tax return. Okay. That is going to be the main way that you show and prove how much money you've made. Now, this filed tax return will include all of your income. So if you've worked a W-2 job, if you have a gig, like let's say you drive for Uber or you do DoorDash, that filed tax return is going to show all of your income. Now, if you want someone to specifically see how much your business made, then inside of this tax return, they're going to want to look at the Schedule C for your business. Because if you have multiple businesses, you might have multiple Schedule Cs, but that's going to be the form that they look at if you're trying to prove your income based off of just your business, like your hair business. The second way to prove your income when you are a sole proprietor or a single member LLC is by your profit and loss. Now, if an underwriter or a bank is looking at a profit and loss, a lot of times they're going to want to see it from your accounting firm. So you have to be careful with this one. If it's self-prepared, they may not trust it. But if you're working with an accounting firm, they will accept it. And I've had these things come to me frequently. As a matter of fact, my client, Mark, if you're watching, Mark, I got your email and we are going to send you your P&L. He's in the process of buying a house. And because taxes, right, it's not like, yes, it's the year is over for 2025, but IRS is not accepting tax returns yet. So his lender is like, let's get ahead of the game, have your accountant send us your P&L for the year so that the underwriting can start doing what they need to do. And then once the tax return is filed, that's kind of just like sealing the deal. So the P&L will also show how much money you've made. And then lastly, this is mostly for supporting documents, but then you have like bank statements. Now I put this one last because this right here is really, again, supporting. The main item is going to be the first one. It's going to be that file tax return or that Schedule C. Like, that's what they're really going to be looking for. Second runner-up is a P&L, but again, they're going to ask for that P&L if we're in like a middle of filing season hasn't started yet, or maybe we're in the middle of the year, like let's say we're in June or July, and they want to make sure you're still on track to kind of make the same amount of money you made last year. Then they're going to want to see a P&L for year to date. And then, like I say, for the client that I'm working with right now, we're in January. We're in early January. So the IRS isn't going to open up until late January, maybe early February because of the shutdown last year. And so they're like, okay, have your accounting firm send us your P&L so that we can do kind of like a preliminary approval before the taxes get filed. Now, if you are taxed as a partnership, meaning it's you and someone else or multiple people, then you are going to want to, again, show a filed tax return. And specifically, up here, you're looking at a Schedule C if you want to see exactly what the business made. But a filed tax return, they may also ask you for a Schedule K1. And this will show how much the business made and then how much you made as a partner of that business. And so that is another form that they may require or request from you. And then again, I say the next one, they also may want to look at a P&L statement. But the P&L statement will get a little tricky when you're talking about partnerships because a lender will typically want to know, okay, how is your operating agreement set up? Like, what is the profit split? Because in partnerships, you could have someone just making 1% of the profit and maybe the other person making 99%. So if you're just looking at a P&L, then they don't know how the profits are split, then that's not going to be a reliable source document for them to prove how much money you actually are making. So with this one, if you're in a partnership and you want to prove your income and you want to send someone your P&L, you want to go ahead and send them your operating agreement too, and make sure that operating agreement outlines the profit split for the business. And then again, lastly, bank statements. And these bank statements would be personal bank statements for the partnership. So then we get into the S corp, and this is like where everybody wants to be, right? Like everyone's like, oh yeah, I want to be an S corp. I want to be an S corp because I'm trying to get approved for a house, and I need to show up on W-2, and I just want to look super legit. I would caution you if that's the only reason you're looking to be an S corp, because there is a lot involved when you make that election to be taxed as an S corp. It's going to cost you more money because you're going to have more expenses, number one. And number two, there's just so much more that goes into being taxed as an S corp. And honestly, and I'm, not lying here, if you're going to be taxed as an S corp, then you need to be working with an accounting firm during the year, because there are just so many things that you need to make sure you have in place. Number one thing, stock basis. And you're probably like, what the heck is that? I'm not like, this is not a tax class, right? But when you're taxed as an S Corp, now you have to keep track of your stock basis. And not to go into any detail, but there was a client that I was working with, her salon, she was paying herself as a W-2 employee. So everything was fine there. But then her business actually lost money. And because her business lost money, we could have used that as a way to deduct from her personal tax return, but she couldn't prove her basis. And she didn't want to pay for us to figure out her basis, because when it comes to stock basis, you have to go back to all of your prior, S Corp filings. And so she wasn't able to take the loss because you have to be able to prove your basis in order to take a loss. So again, very not trying to go too technical, but I'm just trying to warn you that with an S Corp, there are other things that you have to do. It's not just like, oh yeah, I get to put myself on payroll and W-2. But the good thing about it, a S Corp or a C Corp, is that yes, the best way to prove your income, or not the best way, but one of the main ways that you prove your income is by having a W-2. And so now you look like, someone who maybe doesn't even own a business. If you're just getting approved with W-2s, you just look like, yep, I have stable income. I work for a company. They don't necessarily have to know that the company is yours, but now they're just seeing you as a W-2 employee. And that's one way to prove your income without jumping through a lot of hoops like these folks up here go through. Now, the next way is still that filed tax return. All right. Because remember, when you're taxed as an S Corp or a C Corp, this is just part of how much money you're making, this W-2. You also have what's called distributions. And these distributions add to your income. And so that's why you want to make sure that you're not only getting paid and, you're not only showing your W-2. I actually had this question come up. This hairstylist, she was new to the S Corp. And we set it up. We were paying her, like before she had the S Corp, she was pulling in about 6 figures, not in revenues, but she was paying herself 6 figures as, a sole proprietor or a single member LLC. And so when we put her on payroll, for about half of that so that we could limit how much she was being taxed in self-employment tax. And so she was really worried. She was like, well, wait a minute, Jennifer, like now my tax return was showing that I made $100,000, but now this W-2 only shows that I make $50,000. So I look like I don't make a lot of money now. Like, that's not going to help me. I'm trying to get approved for a house. I was like, no, when you are taxed as an S Corp, now the W-2 is just one piece of the puzzle, because they're going to be looking at your W-2 and they're going to be looking at your filed tax return, because that's going to show your distributions. And your distributions, once you're taxed as a S Corp, that's also going to be on a Schedule K-1. Again, we're not going into the details of like the technical things, but I'm just telling you ways in which you prove your income, depending on how you are taxed. And then of course, also here we have the P&L, right? Same deal. This is going to be important if you're in the middle of a tax year and someone's trying to make sure that your income is on track with what you've done in the past. But again, not self-reported. A lot of times they're going to want it from an accounting firm, right? So your P&L, and then of course, bank statements. But again, bank statements, like I mentioned, are always going to be supporting, because this really shows cash flow, not necessarily proof of income. So, so this is how you prove your income when you are self-employed and or business owner. And you can see here, none of these options, not one time did I say 1099 NEC. So if anyone tells you to file a 1099 NEC, you can confidently say that is wrong. And you already know you're working with a wrong tax professional, or the wrong accountant if they tell you to complete or file a 1099 NEC on yourself. So yeah, that is it. That's all I have for today. I went a little over. I try to keep these between 10 and 20 minutes just because these are little nuggets for the tax season. But if you are a self-employed hair professional or you have a hair business and you want help filing your taxes for 2025 or prior years, or you're looking for a good accounting firm that's going to help you with your accounting during the year, there is a link in the description where you can reserve your spot for 2025 or reach out to me and inquire about accounting services for 2026. I'm Jen, and again, I am the founder and CEO of Hair CEO, and I help simplify profits and taxes for self-employed hair professionals and hair business owners. And I will see you tomorrow when we talk about another tax topic for 2026. See you tomorrow.